Good morning, everybody. Welcome to Raise 'em and welcome to our short-term rental class today. We have Berlin, Patten, Ebling, and we have rentsiestakey.com here to answer all your questions regarding short-term rentals here in Sarasota. Might cover a little bit of Manatee, not really sure, but we're gonna try to answer all your questions. We will have a question and answer session at the end, so please stay at the end for that. We do have a sponsor. They did bring snacks for people who are here online, so who are here in person. So you can definitely take a wander back there, grab something to get you through the next hour and a half. And they're here, and they're going to tell you a little bit about their business. Thank you.
All right, so I'm Dave King, and this is Brandon Wheeler. We're with Premium Mortgage here, and so a little bit about us is we're a locally owned mortgage lender here, and we're basically full service. We do our own processing, underwriting, which is pretty huge, especially when you're dealing with short-term rentals, because you can relay the message directly to that underwriter. But we do everything from bank statement loans to DSCR loans. We also do all the regular conventional and FHA as well. I guess our strong suit is just making things work when other lenders maybe can't. That's kind of the benefit of working with a smaller mortgage bank because, like I said, everything's kind of in-house. We're not necessarily a small company, though. We're in 26 states, and we do, I don't know, I think we did like what?
2 billion?
Yeah, 2 billion last year. So, we do a lot of loans, but we have that small business feel where the owner of our company is willing to, make it work. And then in terms of, DSCR loans on the back end, anybody that maybe just wants to pay cash for it and, do away with the mortgage process, we also have a delayed financing option. So after they close, if they don't want to wait the 6-month seasoning, which you usually need to do a refinance, they can refinance before that. And, it's a pretty quick and easy process there. Yeah.
Well, hey guys, to kind of go on that as well, our DSCR product, that's like the short-term Airbnb type loans. And I see a lot of people working with somebody out of state because a lot of times out-of-state buyers, we do something called a second opinion. So if you send us the loan estimate, we'll give the buyer a $200 Visa gift card, just a way for us to kind of prove that we can beat it. And we also do other types of investment loans. But other than that, enjoy your class, and we'll talk to you guys after.
You guys have any questions on anything? No? All right. Should be good.
Thank you, and thank you for being here. They'll be here after the session as well, so if you have any questions, you can go up and talk to them after the session. Did you want to give out your prize now, or do you want to wait till after the session? Well, because they're going to do it now. All right, I'll give you a couple more minutes, couple of seconds. I'll be happy to. Oh, try to be fair.
All right, Phyllis Povilo.
Oh, nice. Phyllis, congratulations. Okay, so we're ready to get started.
Thank you. Good morning, everyone. My name is Jill Bowen. I am a real estate attorney with Berlin, Patten, Ebling. I handle mostly residential, commercial real estate. I got into the short-term rentals arena around when I first started working at Berlin Patten. I had a horror story with short-term rentals, and then it ended up with kind of like a deep dive on how this all works. And now I have taught this class many times and learned many more things. So I'm excited to share everything with you today, and I'll be sure to share my horror story at some point during the presentation.
My name is Brad Wilson. I'm a licensed real estate agent and general manager at rentsiestakey and M&M Property Management Group. We represent a little over 300 properties in the Gulf Coast of Florida, from Anna Maria Island down to Cape Coral and Fort Myers. So obviously, we're happy to help you. And please ask any questions that you guys have, so we can try to provide clarification on anything you guys are having trouble with out in the field.
All right, so I'm gonna get started. Let's see. So I have a little PowerPoint presentation to kind of guide us and about what we're going to talk about today. We are going to jump right into it with some of the contract considerations. Sure. So there were some handouts outside. I have a bunch of materials that I'm going to go over. If you would like to have all of them emailed to you, you can either come and leave me a card at the end or grab one. I have a box of business cards up here, so just come and grab one, and I can send that all to you. There are other materials, not the PowerPoint, but yeah. Okay, so we're going to jump right into it on the contract side. So this is a screen grab of section 6 of the FAR/BAR contract. So you can see a couple of areas that we have highlighted here. One of the most important things that I want to point out is that in general, the seller is required to deliver occupancy and possession free of tenants and future tenancies. So if you are a seller and you have a tenant in place, long-term, short-term, any kind of tenant, it is essential that you check box 6B in this contract that says that you have a tenant in place on this property. Florida landlord-tenant law is very tenant-friendly. So if you buy a property and there's a tenant there and they have a valid lease that is still existing, you don't just get to kick them out because you're the new owner. That lease is going to control. I'm talking more for long-term leases there, but I just want you to be aware of that it's a very strong landlord-tenant law in Florida that protects tenants. And so you want to make sure that if you are selling property that has a tenant in place, you are checking box 6B. And there's a couple of reasons. One, it gives the buyer a chance to look at that lease, right? You're going to look at the lease and see if you're agreeable to the terms. If you're not agreeable to the terms, then the buyer has an opportunity to cancel within 5 days after receiving that lease. If for some reason you forget to check this box and it turns out there are tenants in at the property and you find out maybe the day before closing, that's going to be a reason for the buyer to be able to get out of the contract, especially if they don't like the terms of that agreement. So that's for a long-term lease, but this also applies to short-term rentals. So you may think of your typical short-term rental, vacation rental. I'm kind of going to use those terms interchangeably. Those types of agreements, maybe like Airbnb, VRBO, you're not going to have a traditional lease, right? You might not have a written signed lease in those situations. If you've ever rented on Airbnb, you know that. However, you still want to check this box, right? You still want to let them know that there are future tenancies that are going to be in place after this closes, because those are still, they're still valid unless they're going to get canceled prior to closing. We'll talk all about that. But making sure that you're checking box 6B on this contract is very important. I'm going to pull this mic out so you hear me when I turn my head. Another part of this section 6, discusses tenant estoppels. Tenant estoppels are not required for short-term rentals. They are something that you're going to see when you have a more traditional lease, and that is where the tenant is going to sign a form that says, this is how much I pay in rent, this is how much I paid in my security deposit, I'm not in default, this is when my term ends, things like that. That's not going to be something that you're going to have signed for a short-term rental, right? Because it doesn't really make any sense. You don't have a written lease. You might not have a security deposit, things like that. So that's one thing to keep in mind. You don't have to have an estoppel on a short-term rental. However, you may want to consider asking the seller to provide written proof of any deposits, payments. Sometimes, you're going to prepay, like on Airbnb, you may pay half, or maybe you pay some kind of deposit. You want a written record of all of that so that it can get properly transferred at closing, right? So we want to make sure that on the settlement statement, if there's a deposit, it's getting transferred over to the new buyer. So that is something else to consider there. And then on section 19, for your addenda to the contract, there's a couple of things that you want to keep an eye out for here. When we're talking about short-term rentals, something that you may not immediately think about, but is very important, is your HOA and condominium restrictions, right? You may think that you can do a short-term rental in a condominium, and you are, the local municipality code says that you can, but your condominium can have more restrictions that are going to control and are going to they are going to essentially trump all the other restrictions that are in place. So that's why I have the condominium association and the HOA association rider highlighted. And then finally, the seasonal and vacation rentals rider. I would love to see, maybe this will be a project for us one day, I would love to see this rider with a little bit more information on it. I think it's only about 2 paragraphs. This is a screen grab of it up here. That is really the whole thing. The only thing that this rider really tells you is, will the buyer allow the seller to continue taking reservations and future bookings during the in-between period after you go under contract and you actually close, right? And so this could go either way. Sometimes you see someone that's going to buy a property that's being used as a short-term rental, but they're planning on gutting it, knocking it down, starting over, maybe changing all the rental rates and changing the property. In that case, the buyer probably doesn't want the seller to keep taking reservations, right? What if they take a reservation a year in advance and that's not what they want to do with the property? So you would check that box that they may not enter into new reservations. On the other hand, sometimes you have buyers that are just looking for passive income, right? They know this property is income producing and they want it to just continue to be rented out into the future. They're just going to kind of take over management of it. And so if that is the case, then maybe they do want them to be able to keep taking reservations. And then if that's the case, does the buyer want approval of dates, price, length of stay, et cetera? So that's what this rider is really doing. The seller is probably going to want the ability to continue to take reservations, because what if the buyer cancels, right? What if it doesn't close for some reason? The seller wants to make sure that they're still going to have reservations going into the future. So just something to consider when you're filling out this rider.
And just one quick point on that is you're going to really have to use that when it comes to multifamily properties, or like duplexes, triplexes, or fours, because those are like, people are buying those properties obviously for cash flow as investment properties. So both the buyer and the seller want to make sure that they're taking that property over with as much income as possible. So you want to make sure that you use that rider if you're working on a multifamily deal, for sure.
Yeah, great. Thank you. Okay, so the next section I want to get into, I just have a few other considerations to think about when we're buying and selling short-term rental property. One is the term turnkey furnished. I know you've probably heard us say this in our other classes, or you've heard people talk about it before. Turnkey furnished is not a legal term. It doesn't have a legal definition in the statutes. I don't know what that means, right? I mean, we have standard language that we use in our office, but that language is going to be different in your office or in a different closing agent's office. So a lot of times for these income producing properties, you have this phrase turnkey furnished, or they want to sell the property with all of the furnishings in it. I just want you to get really specific about that. I mean, there's a couple of different ways to do it. You can do an inventory list. You can do kind of like a video walkthrough where you're explaining everything that's going to be on there, but just being as specific as possible. I have been in a closing where there was vacation rental property. Someone thought that they were getting like the beach bikes, the stand-up paddle boards, the kayaks, things like that, and the seller had taken those. They didn't think those were transferred, and it was a debate right there at the closing table. They thought that they were getting it, and they weren't. And so you just want to be really specific, especially on those properties that might have some other amenities that would go with it. And I would also like to add golf carts too is another common one. Sometimes we see vacation rental properties transferring with golf carts. So again, just being really specific, put down, like the VIN number, the make, the model, things like that, so that everyone's on the same page about doing that and getting the title transferred. Question? So I'm repeating the question because of the recording. There's a box on the MLS that says turnkey. And so I completely understand. I wish it wasn't there, right? Because there is still the question of what does that mean? Like, for example, does turnkey include silverware and pots and pans? Yeah, I mean, but I've seen people debate it. What about linens, right? And so there is like some kind of debate between, the parties. And even if you think you and the agent are on the same page, you want to make sure the buyer and seller are on the same page as well.
Yeah, I mean, we've had it before where we're helping a real estate agent take over a new property at closing. Property closes, we walk in to do the initial inspection, and the artwork is gone. Things that vases in the corner, beach equipment, right? I mean, your biggest thing as real estate agent, right, is you're looking for that residual business. You want these people to call you back, 4 years from now, 10 years from now, whatever, and buy another property, buy another investment property. So this needs to be a good experience for them, right? And if they go into that property and have to spend $1,200, refurnishing it because it wasn't on an itemized addendum, you're just saving yourself the trouble to say, like, when I take this property over, I know it's going to have the artwork, it's going to have the vases, it's going to have the silverware. they can't take anything out of it, they're gonna have to spend $1,500, $2,000 putting all that stuff back into it, or they're gonna not have a great vacation rental, especially with how competitive the market is. So it's really important that you guys go through that step and itemize what's in the house, do an inventory, make them sign off on it, and it'll definitely alleviate a lot of problems down the road.
Yeah, the question is, can the inventory list with the furniture impact the loan? It absolutely can, right? If you're assigning a value to the furniture, that can definitely impact the loan. There's a couple of different ways to do it. One option is to, get it approved ahead of time or make everyone aware ahead of time. But the other option is to have it included as part of the purchase price, right? It's kind of incidental to the sale. So you're having the additional furniture and items not having their own dollar value assigned to them. They're just incidental to the sale. That's typically what you're going to see. Yeah. Mhm.
And then like for whatever reason.
Yeah, you will see issues with. Do you want to? Yeah. 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 Everything is. Yeah. You want to have it included in there. Yeah, I mean, it's gonna be case by case. You all have experienced some of this. You want to? Yeah. Was there? Yeah. Yeah, so that and I'm dancing around this a little bit because I don't necessarily want to tell you to do this outside of closing, but that does happen, right? People are just handling it with a separate agreement outside of closing if that is an issue. I'm plugging my ears and like I don't, we don't want to know about it in that case because we're required to disclose things to the lender that we know. But yeah, I mean, so yeah, they're not going to give loans for furniture, so you want to have it included as part of the sale. If it creates an appraisal issue, maybe that's going to be a situation where you're going to handle it outside of closing. Yeah. Okay, so I'm gonna go on to the marketing photos on this list. So Brad can talk about this a little bit more as well, but marketing photos are extremely important as part of when you are going to be listing a property on. I mean, obviously, you all know for sale, but then also to rent it as a short-term rental in the future. So something that might make you look like a rock star is asking the question, if you are buying a property that's income producing that has awesome photos, ask the question if you can have the photos as part of the purchase, right? That's going to make you look really good for your client. It's going to save them some money, especially if they're not making any changes to the property and they're just going to relist it on their own, on Airbnb again. Use those same photos, right? Maybe it'll continue to produce income. So, I would just add that in the additional terms if you are going to be getting the photos at closing and they can just be sent to the buyer. Obviously, make sure that you are following all the rules about whoever took the photos and who owns the rights to the photos if there is a professional photographer. I don't know if you probably deal with photos a lot more.
Yeah, typically when I take over a new property, one of the first things that I'll do is reach out to the individual who's got the photos and just ask them, do I have permission to use these photos? Is there a fee associated with it? And then I'll weigh that cost against the cost it costs me to hire a photographer and own the rights to the photos and have somebody go in there. Most property management companies are going to include marketing in their commission agreements with the owners that they're taking on. So, a lot of us have photographers and we have apps that we use, just like all you guys, to take pictures and market the properties. But if we can get them and use what's already effective and just, keep it streamlined, then we're of course going to do that. So I think a good property manager should always do that, but you guys always have the opportunity to do it too, or just reach out to the property manager they're going to be using and just ask them, hey, I can transfer the rights to these pictures to you guys for $200 and then you guys get an additional fee. You can do it that way also.
Yep. Okay, I'm gonna go on to one of my favorite topics. So this is where I tell you my horror story of working at the firm. I think about 6 months, and I get a phone call that says, "Hi, I closed on the property a month ago. We are completely in the middle of a renovation. We've gutted the entire house, and someone just showed up with their bags to stay here for a week." I was covering this file for someone else, and I was like, oh my gosh, I have no idea what we do in this situation. I tried to call Airbnb. I tried, get some more information. It turns out the seller had not shut down their Airbnb account, and they were still taking reservations after the closing date. They said it was an accident. Who knows, right? Of course they said it was an accident, but they had collected the funds, they had gotten the money for this reservation, and this poor family had shown up with their bags at a house that was completely empty. Like they were doing a complete renovation on the property. So in that case, I think the seller ended up crediting the family and helping them get into another unit for the time being. And they obviously took down the account, but it did take quite a bit of phone calls and harassing them to try to track them down and get them to make it right. But so this brings me to what I learned, which is that Airbnb and VRBO does not have a mechanism to transfer accounts from seller to buyer. It's person specific. So if I had a property, I would go and make my own Airbnb account and link my property to myself. And so then when I sold that property, I essentially would have to shut down my Airbnb account, and then the new buyer would create a new one and attach the property to that. So why am I telling you that? What you need to be doing as part of the closing is making sure, I would add this in the additional terms, or get it in writing, that the seller will close their Airbnb account or VRBO on or before the closing date, right? They're going to shut it down. The other thing you have to consider is, what about all those bookings that are still out there, right? What if you have bookings that are in the future, they're going to be post-closing? Couple of different ways to handle it. I've seen people transfer their password to the new buyer, so they kind of like take over their personal account. I don't love that option. It kind of creates a security issue for me. There's personal information in there, but if you shut down the account and start over, you're losing the reviews, you're losing the goodwill, you're losing kind of like these repeat customers. So that is a problem. And then the other option is to shut down the account, cancel all the current bookings, have the buyer create a new account, and have everybody rebook with that new account. I want to let Brad jump in here, because there's also obviously property managers that are handling these properties on these platforms, but also off of them, and that might have some pros and cons as well.
Yeah, for sure. What we usually recommend to do is, obviously before closing, the new buyer, right? They're going to have some of the basic information. They'll know the dates to stay. They'll know how much the stays are going to be. Assuming they've already worked all that stuff out, it's the day before closing, right? What would typically happen, is, at least the way that we try to set it up, is that the person who's selling the property would provide the buyer's property manager a spreadsheet with the names, the email addresses, the phone numbers of all the guests that are on there. And the property manager would call those guests the day of closing and say, "Hey, my name's Brad. I work with Rent Siesta Key. We're the new property managers for this unit at Bay Oaks," right? And the owner is selling it, but don't worry, your reservation is protected and guaranteed. This is what we're going to do, right? The current owner is going to cancel their Airbnb account. You're going to receive a notification that your reservation has been canceled. We're going to send you confirmation that we've booked the reservation for you at the same dollar amounts that you would have paid through the third-party source that you already had. We're not going to charge you until you've received a full refund from Airbnb, unless the reservation's in the next 10 days or so, right? And that's usually how we handle it. So, and people are usually very cool with that. I would say like 99% of the time, everybody's like, "Okay, sounds great. Thanks for letting me know." Otherwise, they just get an email from the Airbnb account saying, "Your reservation's been canceled. You've been refunded." And they're like, "Well, now I don't have a place to stay." Yes, go ahead. Yeah, that's a common thing that we run into a lot. People who are selling the property have two major issues with canceling their Airbnb account. It's I might have multiple properties on it, and I don't want my review status as an owner, my superhost status, to be affected. When you cancel an Airbnb house on Airbnb, Airbnb will ask you why, right? And one of the options is I sold the property. They'll be required to have a copy of the closing statement emailed to them. And it's all done through the Airbnb app, and usually same day. And an Airbnb will not fine you or penalize you for those bookings if you sold the property or legally transferred your ownership in it. Yes. That's correct. Yeah, there's no way to, because it's not, I mean, new owner, it's a different representation of what that property may or may not do, right? I mean, that's how I always explain it to people, and that's how I would explain it to a client is, yeah, you're going to lose those reviews, but you might do things differently. You might do things better. There might be reviews in there that negatively impact you, especially if it's been around for a long time. So, work with the new property manager, start from scratch. The only way around that is like if as a property manager, I'm hosting the Airbnb account, I'm hosting the VRBO, right? So if the new owner stays with me, then then all that stuff transfers with them. So that's always an option for them to be able to consider. And this just goes back to the original point of if you get the property manager involved in the conversation early, they can help you with all this stuff. And they can talk to the potential owners. They can let you know what's going on. They can let you know what the accounts look like, what the reviews look like, and all of that, and all of those things. Yes.
Saying what you're advocating is to cancel that whole deal with Airbnb and book it all direct to the management.
That's correct. Yeah. We do not get any issues through Airbnb for doing that. No. And there's no way to transfer the booking inside of Airbnb's platform. So as far as owners are concerned, right? I mean, they're canceling they no longer own the house. And this is where it gets convoluted, but it's pretty straightforward. It's like they no longer own that property. That Airbnb account is no longer relevant. All of the reservations associated with it are gone. If the guest chooses to rebook with the direct management company, now there maybe once or twice I've had a guest say, I don't know who you are, right? I don't know who Rent Siesta Key is. I felt comfortable with Airbnb. Me as the new property manager would say, here's my new link to my Airbnb listing. Go ahead and go on there. Here's the listing for the house. You could pay it. You'll see that the host is now Brad instead of Sam, right? And they'll rebook it through Airbnb, and they're going to pay their booking fees again. They're going to pay all that stuff over again, and it will cost them substantially more to do that. But those are the two ways around it. Yes, you go ahead. Sorry, I've been working.
Thoughts if the new buyer is registered as a co-host, because then he can see the bookings and we don't need to create a list and he will see everything. And is there a way to make the co-host the first host?
You cannot transfer a main account into a co-host account. The other thing is a lot of property managers are using like integrated software. And the integrated software is not going to allow for co-hosting in a lot of the occasions, like Streamline or OwnerRez. They don't allow for that API to be connected to two Airbnb accounts at a time. So you can add somebody as a co-host so they can see all the information and have access. But at some point or another, that Airbnb account will have to be closed, or they will just be a co-host, forever. There's really no way around it.
Yes.
And the other thing is, the last point is just if I own that property and I'm selling it that day, I don't want anything to do with that anymore. I don't want my name associated with it. I don't want my Airbnb account associated with it. And, and people just get caught up in this whole, it just doesn't matter. It's not yours anymore. Cancel it. That's always the advice that we try to give.
Yeah. From a liability perspective, I can
Correct.
agree with that too. Yes. Mm-hmm. Like the same property manager. Yeah. So, I mean,
Yeah. So basically how we do it is we would like to work with that person early on. It usually starts with like a revenue projection process where just as you would with a new client, right? This is me, this is who I am, this is how I market, this is how much I think your property is going to generate, this is how much it's generated in the past. Assuming everybody wants to move forward, we provide a management contract, which they would sign. We would get in touch with, and then from there, the property manager would handle everything. We talk to you as the buyer's agent or as the seller's agent, get all the guest information, make sure we're all on the same page as to what day we're allowed to contact them. Some will tell me, hey, Brad, I know this is going to close. Go ahead and reach out to them early. We let them know what's going on, but we never transfer or cancel until the day of closing after it's already done. Correct. Yeah, as far as the guest is concerned, there's no change. Because they booked with Brad, they're still with Brad. The fact that the owner changed behind the scenes doesn't matter. So we'll set up our system to automatically pay the new owner, new owner tax ID information, all the above on the back end, but the guest doesn't see anything different.
Okay. All right, we are going to move on to everyone's favorite topic, which is the taxes and the fees. So I think that sometimes when I teach this class, people are a little surprised about some of the taxes and fees that are required to do short-term rentals. So I want to go through some of those. And then, Brad can talk about how he does a lot of this on the back end because it can be a lot of work. And it's one of the reasons why a property manager can be invaluable. So I want to start with sales tax. So the first tax that you're going to have to pay as a owner, and obviously a lot of times this gets passed on to the tenant or the renter, is your sales tax. So there is a 6% sales tax in the state of Florida, plus any discretionary surtax for each individual county. So right now, both Sarasota and Manatee County have a 1% additional discretionary sales tax. So that means just to start, we have a 7%, 6 plus the 1% discretionary, a 7% sales tax on the rental. If you have ever booked on one of those like Airbnb or VRBO, you probably see this, you see these line items for these taxes. So you are familiar with this, you know what this looks like, but that's the first thing to consider. Part of the materials, if you email me or leave me your card later, I have all of these handouts from Florida Department of Revenue that explains all the discretionary surtaxes for every individual county. So I'll kind of include that in the package as well. It was just too many papers to print for everybody. So it's easier for me to email it to you. Okay, so on top of that 7% sales tax in Sarasota and Manatee, you're also going to have the local option transient rental tax, which is a mouthful. And this is going to vary county by county. And it's for any rental that's going to be 6 months or less. So this is going to be our short-term rentals. Every county has their own kind of this is your tourist development tax. If you've ever heard anyone talk about that, a lot of those dollars are used to like restore our beaches, to pay for marketing, to bring people to the area, to help with like sports stadiums, or like Nathan Benderson Park got some money from the tourist development tax to help bring like rowing competitions here, things like that. So things that are supposed to improve tourist development here in our counties. You are also paying this if you stay at a hotel, right? So you are also paying this tourist development tax there. For Sarasota, it is 6%, and then Manatee County, it is 5%. So that's in addition to the 7% that's being paid. Oh, it just went up. Oh, I need to update my PowerPoint. I will do that before it gets sent out to you. So thank you for telling me. Yes, I will update that. So those are the tourist development tax. On top of that, you have to have some way to remit all of these taxes, right? It's not just you collect it and it sits in your bank account. You have to send it to Florida Department of Revenue or to the local county. So you have to register with the Florida Department of Building and Professional Regulation, which you all know DBPR, right? This is who your license is through. Same thing with paying your taxes. Registering. You're going to register through DBPR. And then you're also going to register with the Florida Department of Revenue. And then on top of that, you're going to register with a local municipality if they have that requirement. So I'm going to get into that in a second, but every municipality on the county or city level is also going to have their own restrictions or requirements for registration that you need to be aware of depending on where you are. Anything about taxes or registration?
No, not much about taxes necessarily, but just there's so many different registration sources that you have to make sure that you're communicating with in this area. So you have like the city of Sarasota, Sarasota County, Manatee County, Lee County. But then inside of even Manatee, you have Anna Maria Island. And then there's also Holmes Beach, which is its own separate jurisdiction. Longboat Key is its own separate jurisdiction. So you really have to know how to set up the property properly in the area in which you have it. For example, like Longboat Key, you have to, if you're out on Longboat Key, you have to file for a rental license through the city of Longboat Key, where like you have to have a landline inside the house that's active. You have to have a sign inside the house that has certain information on how they can reach emergency services. And then you have to have it inspected by the fire marshal in order to rent a property on Longboat Key. So like if they see you renting a property on Airbnb or whatever that's a Longboat Key condo, the city of Longboat Key will call you and tell you to pull that listing down. They've caught almost every single one we've ever done. You definitely have to go out there and do it. And I'm just kind of, I'll answer your question in just a second, but you just kind of have to really know the individual. Like the city of Sarasota is probably the most difficult. The city of Sarasota makes things very, very hard. They've run it just like a hotel would run it. They want to come to the property. They want to make sure that the pool has a barrier. They want to make sure there's safety devices on the doors and windows. So if they're currently operating a vacation rental inside the city of Sarasota limits, but they have not registered with the city, that could be a huge undertaking on the new owner's behalf. So you really have to know that going in, especially when you're working on the transaction. This property is and I hate to say that people don't do things the way that they should, but let's just be honest, that's the world we live in, right? I think when I talk to agents about this, I always advise, and I do it myself too, when I'm practicing real estate, is if you're helping somebody buy a property, one of the things I want to know is, are you using this property the way that you're supposed to, right? Is it a monthly rental property and you're renting it weekly and you're doing $100K a year on it, and now you've sold the new person that it's going to do $100K? It's not going to do 100K. It's going to do 60 because we're going to have to change it, right? Or if you're going to, and that's just the bottom line. And people have been stuck in that so many times in the last, 4 or 5 years, especially since COVID. Everybody bought all these properties down here. Now there's a lot of people who are here who are upside down on houses because they thought they were going to be able to make all this money on them and didn't follow the rental restrictions, didn't follow the area logistics, got caught, had to change everything around. And now they're trying to sell it. Now they don't know what to do. And a lot of times they blame you, they'll blame the real estate agent. How come you didn't tell me? Just keep that in the back of your mind. When you're looking at a new property, and I'll answer I got 3 in a row and I see them. When you're looking at helping somebody buy a property, just make sure that you go through it. Like, how are you renting this property now? Know the regulations, make sure the new owner is aware of what they're going to have to do to get it up and running the right way. Yeah, I mean, in that situation, and send them to me. I mean, send them to a experienced property manager to give them a pro forma at least. We're always I think any property manager, not just trying to sell our company here, but any property manager would be more than happy. I mean, we get the majority of our leads from working with guys like you. I mean, we want to have good relationships with realtors. We don't really want to practice in the buying and selling. The property management stuff takes us, way busy on its own. We want you guys to handle with that. We're going to handle the property management side. So put them in touch with a property manager or find a reputable property management company that you're comfortable with and have them do a pro forma and have them give you that information. Because if they're licensed and they're doing it the right way, they should know how to do all that stuff. And it can do it for them to make sure it's not a problem. Yes, they do. Yes. Correct. And then I would say this too, it costs a lot more when you do it after the fact. Yeah, so you want to get a property manager involved, even if it's just for an educational purpose. We're more than happy to try to work with a new client to help grow our business. I think any property manager would say that, we're going to work because we want to work with you guys, time and time again. If we don't get it done on one, then it doesn't matter. We just want to try to help you and try to help the person who's involved. At least that's the standpoint I try to take. Yes.
Well, I learned there's an exception if you live on the primary lot and have an ADU and you rent it. You don't have to register with the department. You don't need an inspection in the city of Sarasota.
No, so not if it's short term. So if you are, so I have a whole slide about ADUs, but I'm happy to jump into it right now, which is that so the question is about an ADU where you are living on the primary. The ADU is an accessory dwelling unit. There are more options for permitting those in Sarasota and Manatee County over the last 4 or 5 years. However, if you are renting it as a short-term rental, so still 1-week rental periods, you still have to register it even if you are using the main property as a primary. Now, if you want to use it as like a mother-in-law suite where you move your grandma or your mom in there, and they're going to be there for a long term, then you don't have to register it, just like you wouldn't have to register for a long-term lease, right? So that's but if you're going to list it on Airbnb, you still need to register it.
That it does need to be regulated if the owner lives on the same lot. So if
That is news to me. Yeah, that is news to me. I don't think my understanding is it is still required because you still have to pay the taxes. You still have to, yeah.
Especially if it has like a pool or something like that. I would think that the safety features and the window and the water sensors and the fence and all that stuff would still apply. I would say that's probably, they probably do need to call them and let them know. Yeah.
Lives next door to a that they bought the whole store. And while they were living in it for a very temporary time, they decided we're gonna Airbnb this. And of course, the neighbor, now they've become friends, lets her know this. And my friend who lives next door is very, very, very against this and telling her this isn't the zone for that. You can't short term here. But the new owner proceeded to do so. My question is, if we were gonna open a hotel, there's gotta be certain standards put into place, right? And so they put these standards into place where you have to register at the department, you've gotta register at your local municipality, and you've gotta register at the DPR. So why, and maybe this isn't a question that needs to be directed towards either one of you, but maybe on a legal standpoint, maybe you can help me understand how someone can get on a platform like Airbnb without having these credentials uploaded into the system.
So I'll answer
Yeah,
that. I'm
go ahead.
happy to
Yeah.
answer that. Airbnb handles all of that stuff for you. And that's no, I agree with you 100%. So Airbnb is essentially not doing all of the things that they're required to do because they have more of a national account. I don't know exactly how it works, but if I'm an owner, I'm doing this alone and I go to Airbnb and I make an account on Airbnb. Airbnb collects my taxes. Airbnb handles my insurance and protects my guests, and they do everything. Now, if the city of Sarasota goes on Airbnb and finds your property and doesn't have an according license with it, they will fine you.
Which they do using AI now, just so you know, they are scanning Airbnb and VRBO using AI.
I also will, I follow that up by saying that obviously there's thousands of properties that are for rent in Sarasota, and I'm sure that they don't catch them all. You know, it is. They shouldn't be allowed to do it.
I think that for the Airbnb side, I think there's just too many municipalities. I mean, you think about every single city in all of the United States, they just like can't necessarily keep up with everything. So that's probably a big part of it. It's just too cumbersome. So they're expecting you to handle that on your own. I will say for your friend, the solution to this is report them to the city. And I will tell you also now I think within the last year, you cannot report anonymously. So that is a bummer. If you're gonna your neighbor will know it was you, but I mean that, you know, if it's bothering you, then I think that that's what you have to do. And then it's considered a code enforcement violation from a legal side. If they're not handling it properly, you're going to get a warning. If you continue to violate, you're going to get fines, and they can take away your option to rent in the future and take away that license. So that's obviously not what you want your client to be in the middle of.
Right.
was you were allowed to add same last name. Had to be a family member, could be used as a rental property.
No, it doesn't have to be a family member or someone with the same last name. It's just that you would need to live on the primary, or you have to live on one of the structures, and the other one can be rented out. If it's going to be a long-term lease, then that's fine. It's just like as if you're renting renting your property out to anyone. I could rent my property to you, right? But if it's going to be a short-term rental, my understanding is you still need to register with the municipality, like the city of Sarasota, and then you can go from there. So yeah, can we keep going and we'll ask more questions at the end? So we're going to try to get through everything because we're coming up on our time here. So I'm going to keep going. So this is one of the handouts that you should have collected. If you didn't, it's sitting out there. Our office put this together for you all kind of as a guide. I don't expect this to be covering every single thing that you could possibly think of, but I wanted to give you a breakdown of Sarasota and Manatee County rental restrictions and requirements so that if you do have a client that's looking and they're thinking, oh, I'm just going to buy this property and immediately start renting it as an Airbnb, this is kind of a guideline that you can say, hey, actually, there's some more to this that you might want to be aware of. It's kind of like a cheat sheet for these municipalities. So we have the state of Florida registration at the top, then Sarasota County unincorporated, which does allow short-term rentals for periods of 30 days or more. So that's something to keep in mind for Sarasota County. There's no additional registration requirements for Sarasota County, but it is a longer rental period that is required, is that 30 days versus a week in the city. And I have a little map of the city of Sarasota. So city of Sarasota, I have on here your minimum rental period, your maximum occupancy, registration requirements. You'll see that some of these registration requirements are very cumbersome. We're talking about, inspections, like Brad was talking about making sure the pool cage is up or the pool barrier, testing all the fire alarms, making sure there's an evacuation plan, making sure there's parking, all the information about who to contact in an emergency is posted, right? There's lots of requirements for all these municipalities. And so I just like to make people aware of that. I think it's also, the whole point of this is to make you look good for your clients. So this is just a resource for you to say, like, look at this information I have about these rental restrictions. I will caveat this by saying that obviously everything gets updated all the time when there's changes to the code, just like those tax numbers change. So just keep that in mind. It's not all encompassing, but it is a good guideline to kind of get you started. If you ever want me to look up a different municipality than one's listed here, you can always email me. I'm happy to go and, for example, like I don't have City of Venice on here, something like that. I'm happy to do some digging for you on that. Okay. I do have my slide about ADUs. We've talked about them a little bit already, but one of the other things I want to mention is that ADUs were recently, the options for them were expanded around like pre-pandemic area timeline. We were trying to address some affordable housing issues. One of the expansions was allowing they can have kitchens, right? Manatee actually started this, so shout out Manatee County. They were the first to kind of allow these in our area, and then everyone started to follow suit. One of the important things is there are going to be restrictions on like height, square footage, and style. They don't want the ADU in the back of this kind of Laurel Park neighborhood where everything's like eclectic and has a certain look to it, and all of a sudden you have a very modern like white box in the back of the property that doesn't match the house. That's not going to get approved. So keep that in mind. It does kind of need to match the character and style of the ADU on the property. These are if you're going to be building one, you're going to need a building permit. This is something that they're going to be looking at. They're going to be looking at the zoning. I will say everything with the city and county right now, zoning department is very slow. I think it's a result of the hurricane, but I just want you to keep that in mind. If they've told you the timeline is a month, it's probably 3. And so just keep that kind of stuff in mind when we're thinking about a property that you can add an ADU to. Okay, go on to insurance considerations. So neither of us are insurance agents, but we do deal with this a little bit. So I just want to touch on it because it is something important to think about. Obviously, you have to think about flood insurance, especially now, especially after the storms we just went through. I don't know if anyone saw that news article about the couple that was staying on Siesta Key and like they were from another country and they hadn't been checking the news because they were on vacation and they just like didn't know a hurricane was coming and they were out there, kind of stranded. It's just something to think about, when you're having one of these properties, like storms can come, there can be damage, what are you going to do to get that property repaired, and what kind of insurance and rental insurance are you going to have on the property? So, This is something Brad and I were talking about a little bit before. He has some contacts that he can send you to. I have some contacts that we can send you to if you ever need someone. But you do want to make sure that you're telling your insurance carrier this property is being used as a short-term rental. And also there could be some other hazards that you want to take into consideration, right? A pool, a trampoline, a golf cart, are you giving them bikes to ride around? You want to think about all that when you're talking about a short-term rental versus a regular single family. So, yeah. Okay, I think that is actually it. This is my contact information. Let's open it up for questions.
Yeah.
Anything you want to add?
No.
Okay. Questions? Yes.
Airbnb, and I know Airbnb for, do you get extra insurance for short-term rental or just rely on Airbnb?
So we have, when we sign up a new owner, we require the homeowner to have a homeowner's insurance policy. We look at that homeowner's insurance policy at onboarding and make sure that there's no wording in it that says that it won't cover somebody if they're paying to be there, right? So sometimes the homeowner insurance policy will have a personal injury protection clause, but it'll say if you're having a renter in the property, it's not going to cover the renter. And then in which case they would have to go and get renter's insurance if they wanted to rent the property. So you have the homeowner's insurance, and we have company insurance that handles us, our vendors, handles us, our vendors, our clients. And then depending on what source they book through, they have coverage from that as well. So like Airbnb provides air cover. VRBO does not provide. If VRBO provides the $2 million personal injury protection plan, I believe they write those through Rental Guardian nowadays. So Airbnb and VRBO have their own kind of insurance plan that in case something happens, what we try to focus on is not being negligent in something. That's really where the liability in our experience opens up, where, you have this step is broken. I know it's broken. Homeowner knows it's broken, and we're still renting the property. People are still walking over. We haven't blocked it off. That's where we're going to run into trouble, So we try to keep ourselves out of that. But other than that, as long as you're taking care of the property as best you can, the liability, at least in our experience, is kind of limited.
Other questions? Yep.
One is describe as a property manager that focuses on vacation rentals, what your typical scope of work entails, meaning when units turn over, do you cover that? Do you cover the marketing? Are you the one that is tracking all of the insurance and taxes? Talk about that for a minute, if you don't mind.
Sure. Yeah.
Unrelated question is, what have you noticed different about the supply-demand balance for vacation rentals from an investor's perspective, as someone that might be considering buying some? Any commentary on, is it better than annuals right now or not?
It depends on where you're at. So to answer your first question, I'll tell you how Rent CS to Key does it. And we'll pretty much all do the same program. The easiest way for me to explain what I think a property manager should be doing is I take your home from you. I'm taking care of it, right? It's my job to rent your property and make you as much money as possible while protecting your property and giving it back to you in the same condition in which it was given to me. I shouldn't be doing, kitchen renovations. I shouldn't be servicing your HVAC. I shouldn't be responsible for like doing your plumbing and running augers through it if you have a clog and stuff like that. A lot of property managers do, and they say, oh, we're going to include all maintenance. We're going to include this. We're going to include this. We include maintenance as far as like basic, light bulbs, batteries, we will replace the filter in the air conditioning system. We'll meet vendors on site. We'll handle any IT related appointments like with Comcast or Frontier. So all that is included in our services. All the marketing fees. So from start to finish, we would be responsible for, if you didn't have anything, we would pay to photograph and market the property, pay any listing fees associated with the vendor. If there's a booking fee that the agent has to incur, we would incur that booking fee. We charge a 20% commission on base rental rate on a short-term rental. We charge 10% on an annual. So if it's an annual, then the program's a little bit different. It more or less includes finding a tenant, doing the background checks, securing the security deposit, making sure that the tenant pays rent. The only additional thing we charge for in that situation is evictions. We will handle and process evictions. if we need to. So that's the property management program, at least from our side. Numbers as far as year over year, obviously the hurricane did a significant bit of damage. But what we didn't see is a bunch of things just kind of fall off, right? I think that the vacation rental market did have a lot of properties that were now no longer vacation rentals. From what we can tell, we lost about 8 to 12% of the real estate market in that storm alone. If us personally, we probably had 59 properties that had some sort of damage that were out of commission for at least 5 months. That would be the shortest one. I mean, anything that had a first floor entry on Siesta Key was closed. So obviously that caused a lot of damage. It did a lot of damage to our business for sure. Because we lost January, February, March on a lot of these properties, and that was pretty impactful. However, our numbers financially are in line with where they were last year. So I think that the same amount of people are coming. In fact, I think that number is still growing a little bit, but there's so much more that's out there. What I will say is, at least from my perspective, if you are not on the barrier islands, you're going to have a hard time renting because there's so much available on the barrier islands, and that's kind of like people's focal point, right? Unless you're coming here for sports or leisure travel, or you're coming to see family, you're coming to stay at the beach if you're coming to Sarasota. And so people are going to look beach to 75, right? The closer you are to 75, the harder time you're going to have. And, we get a lot of homeowners who have houses in Sarasota that are monthly rentals that are having a hard time renting them. And I just explained, like, you have condos in Bay Oaks right now. That's right across the street from Siesta Key Beach with ocean views that are renting for $84 a night in off season. Also the longer period of time you have to rent for, the lower your rate has to be. So I think that's part of the reason why you see so much that's for sale right now. Any of you that are practicing in annual rentals probably are having a hard time finding tenants. You're starting to see people who are going and offering like 1 month free of rent and things like that again. There's so many people here who are looking to upgrade their situations. Vacation rentals are all turning into annuals because they're not generating the income that they needed them to. And this just goes back to our previous point. I think that a lot of people, especially in this room, we're kind of all responsible for that in some degree. It's these people bought a lot of these houses and are not making what they were told they were going to be making, or it didn't sustain long enough, or they didn't plan, accordingly. So I think that's why you see a lot for sale. I think that's why you see a lot of properties switching over to annual. But people are still coming. I think a lot of the fear of the hurricane stuff is kind of gone. We've seen a huge uptick in people who are buying vacation rental insurance. So, people are definitely protecting their stays more. So that's good. So that's just a little market insight from my side anyway, to answer your question. I hope that helps.
Yeah. Related to the commentary about the different portals, have you found any viable alternatives to Airbnb or VRBO? Are there other players worth listing with, or are those two big dogs?
It depends a lot on the property that you're representing. What you'll find if you do this long enough is each market or each outlet kind of markets towards its own client base. So, booking.com can be sustainable and you can get a lot of business from it if you have a highly transient property. So if it's like multifamily, condotel, single night rental, 3-night rental kind of deal, anything that's multifamily in Sarasota County is allowed to rent short term, so they can rent for a night, 2 nights. So booking.com clientele appeal to that heavily. Expedia, so if you have a property management system where you can tap into the hotel market a little bit, people who want that beach stay, because there's no hotels on Siesta Key, so you can tap into that hotel market, Expedia, booking.com, Travelocity, all the above. But Airbnb and VRBO are definitely the major players in the vacation rental market. You get Florida Rentals by Owner, or Florabo, I believe, is another one. We do about 38% of our bookings direct. We focus heavily on marketing the Rent Siesta Key name. So we do a lot of bookings directly, which helps our business a lot too.
Yep.
The part about how often they can rent for. If they're a multifamily unit, they're allowed to rent as short term as they'd like, regardless as to where they're at, unless there's my understanding is unless there's an HOA that overrides it.
Yeah, unless they're always look out for those HOA condo restrictions, but yep.
Yes, the city of Sarasota is weekly across the board, even if it's a single family home. If it's multifamily, you can do shorter. Yeah, if it's multifamily, you can do shorter. And then 2. Yeah.
No,
No.
because that's still a residential single family zoning. It's just allowed that accessory structure. Yeah. Oh, yeah, the tourist development tax for Manatee is now 6% to match Sarasota, right? That's what, yeah, okay. Yeah. Anything else? Yep.
Probably I have, what type of track do you use for a weekly rental? Because we all know that we can't practice law and do our own contracts, so what kind of contract is legal that's outside of a 20-page typical contract?
Yeah, we just use a lease agreement, like the same type of lease agreement that you use on an annual property, just worded a little bit differently. Mm-hmm. Yeah, that's what we use. Yeah.
Yeah, and when people call me and ask me that, I typically direct them in that same place because it usually doesn't make sense to pay me by the hour to draft a short-term rental agreement. Sometimes you are going to want that, and I have done it for property management companies in the past, or like someone that is starting up kind of direct rentals where I have drafted a form that they would use, and it's, you know, just for that company going forward. But that's more like they're going to use it over and over again. But in general, if they have like a one-off and they don't want to pay the legal fees, I mean, because it doesn't make sense to pay a lawyer to draft it up, you can just use that regular lease agreement. Yeah.
That's a pretty cumbersome lease for a 4 or 5 day rental.
Yeah, I mean, we've imported it into our property management software, got it all authenticized, so they just have to go click, 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 and it makes it easier for sure. But you know, from the protection standpoint, you know, we have to protect the clients too, and it covers everything. I mean, it covers what to do, what happens if you smoke in the property, and obviously, a property manager, we have to think about how we're taking payments on these homes. We're taking credit cards, and people can always go and file chargebacks, and that's something we have to fight also. So if somebody smokes in the property or causes damage, that lease agreement submitted to our credit card processor, 9 times out of 10, we win that, you know, as long as we provided date stamp photos. So, I mean, yes, it's cumbersome, and yes, it is definitely a pain, but it covers everything that we would need it to cover so we can protect the rentals, you know? Yeah.
Yeah. So the question was, when it comes to the hurricane, who's responsible for putting up like shutters or protecting from the storm in a long-term lease? So assuming that the lease doesn't speak to that, right? Which, I mean, ideally it would say that you're kind of going to maintain the property. I would say the tenant is responsible. They're living there like it's their home, and they would have a responsibility to mitigate any kind of damages that would come from the storm. But ideally the lease would speak to it. I mean, if you all are drafting new leases now and there isn't a section about hurricanes in this area, you should probably, you know, have me look at it, have someone look at it. The leases need to be sure that they're addressing that, because, you know, it'll probably happen again. So.
Yeah, I mean, from my own personal experience, anytime I've had a question about what to do with an annual, the people I've always asked the advice for always say it depends on what it says in the lease.
That's going to be my answer 99% of the time you ask me a question about a lease.
If the lease doesn't address it, then it's open-ended. You know, make sure that it's in there and make sure that you address it if it's important. I mean, yeah. I mean, I would probably tell the homeowner that we should probably have somebody go over there and do it just to make sure, you know?
Absolutely. Yeah. And, you know, just call the landlord. Hey, what do you want to do about this? Storm's coming. Yeah. Again, it depends. I mean, some houses don't have hurricane shutters, right? So some houses just have the windows that are, hurricane grade windows, or that, they just never got an older house. It just doesn't have them. So it's going to depend on the situation.
Doesn't matter of the parties know who is responsible through the lease agreement and the property management.
Yeah.
Like for me, is it reasonable to expect my 84-year-old tenant to be putting up shutters? And what is she protecting? She's protecting the homeowner's property, so where's the homeowner's liability? So it's just a matter of notifying everybody and make everybody be on the same page. So these are
Yep. In the back.
Yeah, what we will do is we will go to the property. We will bring anything that can fly away, or like lanai furniture and things like that. We bring it inside or into the garage, flip it upside down or secure it, and clear everything away from the exterior of the property. But that's pretty much the extent to which we'll do it at no charge, right? We can definitely facilitate, meet somebody on site if they want to hang shutters and things like that. But we take on a lot of liability if we go over there and we're putting shutters up and we run a bolt through somebody's window. They're going to blame us, so we try not to touch that stuff unless we absolutely have to, but we do go to the property and at least prep it. We check for damage before and after, and we call every tenant and let them know in advance what's going on.
Are the managers of that property sort of our responsibility to get all this stuff in?
Yeah.
Yeah,
Yeah. It'll just depend on what the agreement is for the property manager. Yeah. 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 I know. I could do another probably 30 minutes on this, but I'll try to give you the short answer. So the question is about holding title for short-term rental property. From a liability perspective, obviously, best option is to have the property held in a separate entity, not your individual name. However, if you're getting a loan, that's going to be a challenge, right? Because your lender, assuming that LLC isn't an established LLC that has income and can show their, tax returns and things like that, you're going to have issues sometimes with the lender. If you're trying to buy property with a loan in an LLC. You can always transfer it after the fact, but that's going to cost you in doc stamps. And it's also, it could theoretically trigger your due on sale clause for your mortgage by transferring it from an individual name into an LLC. I've never really seen a lender pursue a due on sale for that reason, assuming payments are still being made. But, we would make you sign something that says we advised you of this risk and, it is a possibility. So that's obviously not great either. But if you're buying in cash, absolutely form an LLC, put the property in an LLC. Now, one caveat to that is don't just form an LLC and then still run everything through your personal bank account, right? That is not actually going to create any kind of liability shield for you. If you are running a property through an LLC, you want to create a new bank account in the name of the LLC. Checks are written in the name of the LLC. You want to make sure that everything gets deposited through there. Everything is kept separate, because if you have this kind of crossover, then that liability protection is gone anyway. So now there's also sometimes questions about what if I own multiple properties? Sometimes I'll see the properties in individual LLCs with like the member of each of them being like a management company that oversees all of them. That's an option. Sometimes I just see everybody put all their rental properties in one LLC. It kind of depends on, what your portfolio is, how many properties you're going to have. We have attorneys at our office that can kind of walk you through the pros and cons depending on each specific property. Yeah. No, you can purchase property in an LLC that's not a Florida entity, but again, if you have a lender, the lender may have an issue. So you need to be checking with the lender on using that foreign LLC. Yeah. Yep.
It's not a question, but I've seen HOAs, association, CSTP, they do not allow LLC to buy the property.
Yeah. This is why I said I could do another 30 minutes, because there's about 1,000 caveats that we could go through, but absolutely that is one of them. That sometimes you think you've got everything dialed in, you're paying cash, you're buying in your LLC, and then your HOA comes back and says, actually, you're not approved. You need to own this in an individual name. And there's not really much we can do about that. You have to follow those rules. So. Yep. You cannot, yeah. So that you cannot do your ADU and an LLC because it's on the same parcel. You'd have to essentially split the parcel and then transfer that parcel into an LLC, which you don't want to do anyway. That defeats the purpose, and you might not even be allowed. So the entire property is going to be in your individual name, especially because with an ADU, you want to keep your homestead exemption. So you can't have a homestead exemption in a property that's held in an LLC. Insurance, yeah. Yeah. So the question is about how the ADU works. It's not on the deed. It's in your county or city code that's going to allow the ADU. And in order to get it built, you're going to have to apply for a permit. So then it'll get reviewed by the building department and the zoning department and approved through those departments about whether it's allowed per the code. Your deed is just showing you the legal description of the whole property. It doesn't address actual structures on the property, right? So that is going to be something that's done through the municipality. Yeah. Okay, I know we have I think we have to be out of the room by like 11:30. So if you want to come up and talk to us or grab business cards, that's fine, but we will end it there. And thank you so much for attending.
Thank you.